Good evening, viewers, and welcome to another edition of this new series, The Business Watch. Just to recap quickly, we're getting behind the scenes of some important organizations in Trinidad and Tobago to obtain a greater understanding of the link between their functions and the broader economy. And this evening, we'll be discussing the concept of venture capital, which may not be commonly known to some of you. And with me is Mr. Kyron Grant, who is the administrator of the Venture Capital Incentive Program, who will no doubt share much more on not only the concept, but some of the work which has been undertaken by his organization. Mr. Grant, welcome.
Good evening, Sandra, and thanks for being here.
Good. Mr. Grant, for the benefit of our viewers who may not be too familiar with the concept of venture capital, briefly explain for us.
Venture capital is, another name for it is equity financing. It's really where an investor takes a share in a business in return for part of the profits. It's a partnership, it's a sharing of the risk, and the investor has a chance to make some money. He shares fully in the risk in the sense that if that business goes under, he loses his investment. But it normally has the opportunity to make fantastic returns, since normally with venture capital, you get into new and emerging areas of business where a lot of money hasn't been made as yet. And I often like to draw the example that perhaps the first group of tourists that go into outer space may be riding in a vehicle provided by a venture capitalist. Somebody who's doing something for the very first time or very early in the life of the technology or the life of the practice.
Okay. And later on in the program, I want us to speak a bit more about equity financing against debt financing. But tell us again, the VCIP provides investors with a tax credit incentive to invest in venture capital companies who would in turn invest via venture capital in small and medium-sized businesses. To what extent has this occurred, and what are some of the challenges involved, particularly as the concept is new?
We haven't had the type of response we had hoped to have from the tax-paying public in terms of taking up the tax incentive. We think part of it is simply that people don't know, and that there are already a fairly large group of tax incentives that are available to people within the normal bands of income, and they are not really attracted to the last incentive, which is actually fixed at the marginal rate. And in fact, there's none of the other tax incentives are as attractive as the one you can get as a venture capital investor. The other issue that we feel takes place is that people are forced to trust the company in which they are investing. They have no control over where those funds are invested. In other words, it's the company that chooses the type of investment into which that fund those funds would be placed. And our public normally likes to have a say in where those funds are invested. And what we found is that on many occasions at seminars and so on, people have expressed a desire, I want to know what company or what project those funds would be going into.
But can that change, Mr. Grant, or it's cast in concrete?
Well, it's not cast in concrete. I think we can make a compromise in that once you contribute to a fund, you must trust the fund manager.
Okay.
And you also have the responsibility to ensure that that fund manager does a good job. So at the annual general meeting of the venture capital company, you can ask all the relevant questions as to what investments, what were the returns, you manage your dividends, you can make a fuss if you think the fund is not performing in the way that you would like, and you actually participate as a shareholder. So you have a responsibility and a right to discuss how that fund performs.
Yes.
All right, but what we found happens in many cases, investors invest and then sit back.
Okay.
All right, they don't necessarily take an active part in how the fund operates or how it reports.
Okay, okay. Let's talk a bit about the registration process, which, you know, I'm not sure how well known it is to the national community. Is it lengthy? What is involved?
Do you mean registration as a venture capital company?
Yes, yes.
It's fairly straightforward. All we need is the normal information that a company would have, memorandum and articles of association, etc., place of business, issued share capital. The only slight difference for a venture capital company is that it must state very clearly that it is its line of business. And we normally prefer that somewhere in the name of the company, it strongly indicates that it is in fact a venture capital company.
Oh, I see.
All right. It can get started with as little as $50,000 paid up share capital. There's an upper limit now of approximately $100 million. All right. This was increased, I think, in 2005 from 20 million, so up to 100 million in terms of paid up share capital. There's the allowance for that in terms of forming the company. Once all those things are put together, it's sent to the administrator. We do some checks, and I would say within 30 to 60 days, if that long, we can have the approval for a venture capital company.
Okay. How many companies do you have on the portfolio at the moment?
Well, we have 3 companies registered as venture capital companies under the Act.
Yes.
There are a couple other funds operating, but they are not under the Venture Capital Act. The 3 companies are Prudent, there's Adventure, and there's a credit union involved that has formed a company called First National Credit Union Venture Capital Companies. There are a couple other companies existing outside of our ambit. There's Dynamic Equity, and I think Guardian Holdings has a company that does some venture capital as well.
Yeah. We take a short break and return with Business Watch on CNC3 in a few moments.